then my guess is from that point on, you're going to go up and actually break above this high, and you should be off to the races. So very, very bullish on gold, just understanding that no chart goes straight up forever. You have to have these healthy checkbacks. It's actually a healthy thing for a chart to do.
So as we've seen, this real volatility in the oil market, I think, an interesting parallel maybe is the volatility that we've seen in the gold market. So can you kind of walk us through, hitting that just above $2,000 and then going back below 1,900? Give us some of your thinking around what's going on there.
Yeah. So what you're seeing in the gold market is classic breakout mentality. And I want people to understand that is that, a lot of people look at that big move up on gold and then the retrace here and they're like, oh, that's not good for gold. That's actually very, very normal. And what I mean by that is if you look at the breakout that we saw on gold, which was right here, and I think we even talked about it in the last interview of it, that I expected this breakout, you then rallied sharply. But where did you go? You went right to this double top, right? So you basically retested the 2020 high, which is resistance. And when you hit resistance, like if you run into a wall, you're probably going to bounce off of it. So you've seen a pullback here. I actually expect gold to come back to about this level right here, about 1850, give or take. So I still think there's some more downside on gold, but that is very normal. It's a retrace to the scene of the crime, which was the breakout trend line. And then my guess is from that point on, you're going to go up and actually break above this high, and you should be off to the races. So very, very bullish on gold, just understanding that no chart goes straight up forever. You have to have these healthy checkbacks. It's actually a healthy thing for a chart to do. And I still think gold has broken out. It hasn't negated the breakout yet with this pullback, and you will start to see a big move up following a retrace here.
Mm-hmm. Does the chart of gold here look very similar if we include kind of inflation numbers to the 1970s here, Gareth?
Oh, unbelievably similar. So let me just show you guys this. And this is always a fun thing for me to show and I always try to tell people to remember this, but basically from 2018 to 2020, we went up, right? So it was a pretty unbelievable rally, $1,100 to about 2,000 and change. And then you had 2 years of consolidations from 2020 into the current year of 2022, right? So remember, 2 years up, 2 years consolidation, and then a breakout. Now, what we're going to do here is we're going to flip back to the 1970s. I'll go to the weekly chart so we can get there a little quicker. Let's go all the way back. Here we are. And now look at this, right? Let's zoom it out even more. So take a look at this. From 73 to 75 here was your up move. So 2 years up, 2 years of consolidation. Okay, from 75 to basically 77 or so. And then look at what's happening here. So again, if you map it out, and I love looking at history for these types of things, gold is repeating its structure, its playbook directly from the 70s, which was the last time we had this type of inflation in the market at a sustainable level. So again, notice that move. We are probably, if you want to just play of where we are in the breakout, we're probably let's look at the double top, in fact. All right. So you could arguably say we're right here in the gold chart. We're just pulling back like this after breaking out. I think, you know what? Let me check that back here. I would dare say that, yeah, maybe somewhere right around here. We touched double top, we pulled back. You're going to look for a breakout above that 2,000 and change level. And I'm speaking about the current gold chart. Again, you'll see a revisit and then off to the races. So in the scheme of this move on gold, you're probably just right here, which is remarkable to think about, where gold could go. I mean, gold was $200 an ounce there. It went up to about $900 an ounce.
So does that that move in the 70s and into the 80s there, does that kind of inform to you a target that you see on gold, or do you try to even set one of those at that point?
Yeah, for me, it's so tough to know, right? I mean, I think the key is you can look at a few things. I don't think I have the guts to say, gold's going to go from 200 to 900, the equivalent of that, which would be like a 400% gain. I think it's a potential move that you could factor in. But again, calling for that type of move seems very unrealistic, even though maybe it does happen. I also think that Bitcoin being in existence at some point takes a little bit of money away from gold as a safety hedge eventually. Maybe not this year, because I still think there's more downside. But at some point, Bitcoin gets low enough and inflation remains high, where I do think it becomes kind of a digital gold type asset, and it does coax some money away from gold. But I think it's very realistic to think in a couple of years you could be at $5,000 an ounce. I mean, that's only a little over 100% move, 150% move from here. And I think gold has been lagging. It's an underinvested asset for a lot of fund managers because it hasn't performed. But you will see at some point a big rotation into the metal if it starts to perform, and everyone will chase it. Just like you saw Bitcoin getting chased back in 2021, everyone else will chase gold at some point too.
Mm-hmm. So what about silver, Gareth? Are there any particular spots you're looking to add positions on silver right now?
Yeah, there are, absolutely. So let me show the chart here on silver. So silver actually broke out. Now I'm a little bit more conservative on silver just because we're in a position where the economy, right? It's an industrial metal as well as a store of safety. So it kind of makes sense, right? So if you were to map this chart of silver out with gold, silver should really be up here at 30 right now, right? Because gold hit its high from 2020. So why wouldn't silver be there? And the answer is probably likewise, like I just mentioned, the industrial side, people are a little nervous about because if the economy does go into recession, maybe there's a little less demand in silver. Having said that, you still broke out. You can see this trend line from this high to here, and here. You still broke out. You've done a good chunk of your retrace. So, yes, it hasn't broken the highs of 30 yet, but I still think as an investor, you buy it down here as long as a breakout holds. And this is where you get into kind of don't get emotional, just go with the facts, just the facts. Well, if broke out, as long as it doesn't get back below this line, that's your buy level. And you got to go with what the chart is telling you. So again, I think silver will still trade up to a 30. It'll probably have some resistance there, but even from 24 to 30 is a great technical percentage move on silver.